U.S. retail sales fell in May as inflation bites. U.S. retail sales fell for the first time in 5 months in May, suggesting that the economic system is cooling faster than idea as the Federal Reserve tightens monetary coverage. Retail income fell 0.3% at the same time as core retail income, which strip out some of the index's extra unstable components, rose 0.5%, less than the 0.8% anticipated. April records for each collection have been additionally revised down. The report stated that income growth slowed to 8.1% on the 12 months. As the statistics aren't adjusted for fee modifications, that indicates that retail sales volumes fell from a year in advance, given that annual inflation ran at an annual fee of 8.6% in May. Spending weakened conspicuously in big-ticket and durable items sectors, with income of automobiles and car elements falling 3.5%, furnishings sales falling 0.9% and sales of electronics and different appliances falling 1.3%. Non-store retailers, which profited disproportionately from the surge in online buying during the pandemic, additionally saw a similarly 1.0% decline of their income. Sales of garb edged up best 0.1%, after a 6% surge in April because of the emergence of spring and summer time catalogs, whilst trendy merchandise income additionally only notched a 0.1% upward push. Anecdotal proof of better costs hitting patron spending has been mounting for a few weeks now, considering a slew of forecast downgrades from stores along with Walmart (NYSE), WMT, and Target (NYSE, TGT) during the last quarterly income season. Target has, due to the fact, warned that it would have to cut costs to shift high volumes of unsold stock. "This is the inflation height," said Dan Alpert, dealing with companion of Westwood Capital via Twitter. The information from Target Ultimate Week was now not an anomaly. There was in addition evidence of rising strength costs crimping spending on other goods and services. Sales at gas stations, which had risen 43% in April as the consequences of Russia's Ukraine war reached the pumps, rose every other 4% in May. By assessment, income at bars and restaurants, which had grown over 17% in April thanks to the advent of spring and the fading of the pandemic, slowed sharply. They grew best 0.7%. Elsewhere, there have been further, albeit still tentative, signs of inflation pressures beginning to ease in the New York Fed's Empire State Manufacturing Survey, published at the equal time. The survey's major index advanced to 1.2 from 11.6 in May, however inventories rose markedly.